And the legislative session is over, but the fight has just begun, especially for those in the minority who will be launching in short order a full-scale response to the passage of the income tax, which is yet to be signed, as we speak now, into law by Governor Bob Ferguson. But it's coming. This is Senate Bill 6346, the tax for now on millionaires. We're going to wait to find out when the first legal challenge comes and if and when the initiative effort is going to begin. I am told by folks in the know that it is coming in short order, but they can't say anything at this point. So that's interesting. And we're going to look back in 2025. It seems so long ago, but we saw the largest tax increase in the history of the state of Washington in 2025. And Washington Policy Center and an economist dove into some of the very real impacts. Turns out that raising taxes on people and business translates into lost revenue for the state. Who knew? We're doing it again. But in this case, we're talking billions of dollars in lost revenue for the state of Washington. And again, this is based on 2025's tax increases. Nothing to say about what is coming for 2026. So, lot to unpack. I'm going to try to get in right away. So here we are waiting on this Monday, the 16th of March, for Governor Bob Ferguson to sign the income tax for it to be officially law. I don't have any real exciting news updates. Still hearing that an initiative campaign is likely to be announced soon. In fact, Brian Haywood with Let's Go Washington texted me back today. I said, what's happening with the initiative? Is something going to happen? He said, soon, nothing to announce yet. So I have a feeling we'll be in the know as soon as that is happening, but nothing new as far as the initiative effort goes on that front. But quick reminder, both Washington state residents and non-residents can be now subject to this new millionaires tax that passed at the very end of session last week in Olympia. This is a $1 million standard deduction for income. And then anything above the $1 million threshold is taxed at 9.9% or combined household income for a couple. So pass-through entities are also not excluded. So if you've got a business that has a really good year and you've got these gross receipts, not net receipts, but gross receipts in excess of $1 million, you're going to pay anything above that $1 million threshold at a 9.9% rate. And that's why so many folks that are opposed to this are very, very concerned. Plenty of speculation about mass exodus here in the state of Washington for business and capital flight. Last week, we talked about Starbucks, the former Starbucks CEO Howard Schultz announcing that he has redomiciled to Florida. Maybe just a coincidence that it was announced on the same day the income tax was passed, or maybe not so much of a coincidence. And then Seattle Seahawks general manager John Schneider came out and said he believes the state's new income tax on high earners is going to have a negative ability on the team's, opportunity to sign free agents. He said, quote, "It's a big deal for us. It's going to sting from a recruiting standpoint." And that is what Seahawks general manager John Schneider said last week. And then, of course, you recall, we're still trying to get the Sonics back to Washington State. I think it was 2008 they left for the Oklahoma City Thunder. And then NBA said in the last few years, we're going to, expand. And Seattle, you want us, show us you got it. Well, the arena is there, ready for them to come. But they said in the last couple of weeks, as we reported on, that an income tax didn't look good. And they were urging Governor Ferguson not to pass the income tax. The governor has given no signal that he was going to do anything to say, as some amendments attempted by Republicans said, let's say we're not going to pass the income tax and implement this until we're sure the NBA is going to put a team back in Seattle. That was rejected by majority Democrats. So we'll see what happens there. I promise to keep you posted. Let's dive in. It's been 5 days since the end of the 2026 legislative session, which will go down in history as the session when majority Democrats passed an income tax that Republicans argue is unconstitutional and will eventually be a tax on everyone's income. That's their take on things. So today, there have been social media posts I can't even keep up on from the business community and folks saying, that's it, we're out of here. So, headline in the Seattle Times, you can see here indicating that new office space in Nashville, Starbucks is moving into. They said they're only moving a few executives, but this office space apparently has enough space for thousands, potentially holding up to 2,000 employees. So, why get a space for thousands of workers if you're not planning to fill it up? Curious. Plenty of questions there. And this morning, I had a chance to interview Senator Perry Dozier, whose district includes Walla Walla. He's a wheat farmer in Waitsburg. So he's very concerned about impacts from the millionaire's tax. Again, to remind you, if you're not aware, the state legislature passed an income tax, Senate Bill 6346, on income in excess of $1 million. So you're taxed 9.9% on income above $1 million. So if you make 1.2, $1.3 million, you're taxed on that $200,000 or $300,000 in excess of the $1 million that you make annually for the state of Washington. It is, according to opponents, unconstitutional because income in the state of Washington is, your income is your property, and property in the state of Washington has to be taxed at a uniform rate so that everyone would have to pay the same rate. So their opponents say you must pass this constitutional amendment if we're going to do this. At this point, it's moving forward regardless of any amendment to the Constitution. So this morning, this conversation with Senator Perry Dozier, as I mentioned, he's a wheat farmer in Waitsburg, so he may or may not be impacted by this. If they've got a good year in farming, you might be subjected to the income tax. Bad year, maybe not so much. He's very concerned about the impact on small business owners and on the egg community in the state of Washington. So here is part of that conversation I had today with Senator Perry Dozier.
When the governor signs this income tax bill, are things going to be better for you tomorrow? No, they're not. Your cost of living isn't going down. Your cost of living in Washington State will continue to rise. This is just, in my opinion, a litmus test to see if we can get a state income tax by a few years. If you're not going to implement it till 2028 or 2029, that's because we got to see if we can actually get it through the Supreme Court. And none of these tax reliefs actually come till that time too. So this is just again, it's a smoke and mirrors that your life is going to be better because now the wealthy are going to pay more. I've been in farming my entire life, and basically, when costs increase in whether it's for fertilizer elsewhere, if it's bought by the supplier and everything, those get passed down. I think we really saw a good example of that with the Climate Commitment Act, because even though it's been raising the cost of our fuel. Obviously, everything that gets delivered to grocery stores, to department stores, comes in on vehicles that are buying that fuel. It gets moved down to the those of us that can't, absorb those costs, and we just pay more and more and more for it to offset the higher cost of delivering that.
I saw another post today on X from Rise Baking in Kent. Said they're laying off their employees and closing up shop. They did not specifically say the income tax passage in Washington state or other taxes passed in recent years are to blame, but that certainly could be the case. So we'll be following that. All right, let's dive in. So Governor Ferguson, still waiting on him to sign the Washington state millionaires tax, Senate Bill 6346. Should be happening any day now. It was delivered to his office last Friday, the 13th. A bit ominous, right? Following passage by the Senate 2 days prior. He has by law 20 days from delivery to act on the bill. So it could be any day. It could also be, up until the very end, April the 2nd. Who knows if he's going to veto any line items in that, if he's going to have any comments or just kind of give it a rubber stamp as is. Remember, the final version that passed did not include nearly the level of tax relief that he originally said, I won't sign an income tax. He never called it that. I won't sign the millionaire's tax unless it includes this much tax relief for small business and this much for working families. And um, it came up rather short of his what he said he would stand for. We'll see what he has to say. But this again is a tax that is projected to bring in anywhere from 3 to maybe $4 billion a year to fund education, state services, some tax breaks for business, and then the rest of it into the general fund. And the majority party can use it for whatever they then choose. Today, I did get a chance to interview Senate Minority Leader John Braun and Senator Chris Gildon of Puyallup. As I mentioned, Senator Gildon is the ranking minority member on the Senate budget. They delivered last year in the longer session a no new taxes balanced budget that really got nowhere with the majority, unfortunately, but it's something he's pretty passionate about. Senator Braun told me actually today that he anticipates one or more legal challenges and probably a citizen initiative. We're still waiting to hear something on that, but he says it's all going to take time to play out. So here's part of the conversation today with Senate Minority Leader John Braun.
On the legislative majority leaders and the speaker. I fully expect there to be at least one. I wouldn't be surprised if there's a couple legal challenges. And the legalities this are very, very obvious to anyone who wants to take the time to read the Constitution. But I think they believe they have an opening because of the nature of the state Supreme Court. But in no case does any kind of legal action happen very fast. That's going to take a year, I would think minimum, maybe 2 years. The precedent is clear, so the lower courts are obliged, as I understand it, to follow the precedent. So I think we probably win early, but the real test is with the state Supreme Court. So I'm a little nervous that if they sue and the news gets out they won at the local level, people will think, oh, the pressure's off, but that's just the first round. And there is a lot of talk out there. I'm not personally involved a lot in it, but about an initiative. I expect one in the next 2 years. I don't know whether it'll be this year or next year. The people are really worked up about this. Not the people paying the tax. The people who are paying the tax are also worked up about it, but they're just making plans to leave the state. Everybody else who may not pay the tax immediately is pretty pissed. At least the ones I talk to are pretty upset about it. In my neck of the woods, I haven't talked to a single person that's happy about this, and I've talked to a lot of them that are just downright mad about it.
So then Senator Gildon brought up the Sonics. There have been rumors around here for years that the NBA might bring the team back to Seattle. And as we reported about a month ago, Governor Ferguson's team was urged to prep him in early February for a meeting with NBA Commissioner Adam Silver. At the time, Ferguson was reportedly urged to prepare to discuss concerns over, you can see here, the high cost of maintaining a team, the impact of employer layoffs, i.e., fewer employees equals fewer ticket sales for the team, and challenges posed by the millionaire's tax on recruiting top players. They also just overall, I guess this was a reference to the tax climate here in the state of Washington, whether Seattle remains an attractive and investor-friendly environment. So that's what happened last month. Who knows what really happened behind closed doors in that conversation with the NBA commissioner and some of Governor Ferguson's leadership. And if they said, dude, you pass this thing, we're not bringing a team here, or they said, go ahead and pass it, just publicly, we have to resist. Who knows what that conversation really, what really came from that conversation. I guess we'll find out in short order. But Senator Gildon had something to say about this today.
I mean, this has a direct effect on that because states like Texas and Florida that do not have an income tax have a built-in advantage over states that do have an income tax, such as California and New York. I wouldn't say so much as if the team comes here, but I would say which players decide to come to that particular team, right? Because almost all of those players are going to make north of $1 million and they're going to be subject to the income tax. And they're going to be calculating what their net income is going to be. And if they're, paying a lot of, 10% tax, they're going to make some choices about that. So I would say, you were talking about the tax layering effect of the B&O tax, the income tax, the sales tax, the property tax, all of the taxes that we have that layer one on top of another. And just whether you're talking about business or basketball, tax policy matters.
Further concerns from a Washington state senator to passage of the new income tax. Now, still not signed by Governor Bob Ferguson. We're waiting on that. But Senator Jeff Wilson of Longview shares some of his thoughts, not only about passage of the income tax, which he believes was really rushed through, but about the whole session. He says, in his opinion, we've bottomed out in Olympia and it really can't get any worse. So that wasn't great news, but having covered the entire session, which ended a week ago today, I can tell you it was, there was a lot of toxicity in that building. All right, so let's get started. It has been a week today since the end of the 2026 legislative session. The big focus, lots of the media attention was on Senate Bill 6346, the income tax bill, yet to be signed by the governor. No reason to suspect that he's not going to sign this, but it was not on his bill signing calendar today, although a very controversial bill, another very controversial bill he did sign today. He signed the bill to that says that ICE officers, Immigration and Customs Enforcement officers in Washington are not allowed to cover their faces. It's gotten a lot of attention, of course, on the national stage. A lot of these officers have been doxxed, their own families, followed home and threatened. So that's why they cover their faces. Apparently, here in the state of Washington, they're not supposed to do that. Going to be curious to see if that holds up because, of course, the federal administration says we control our federal officers and how they operate across the country, and you, Washington, are not allowed to say whether or not their faces are covered. So lots to get into, but I want to share with you what Senator Jeff Wilson of Longview told me about passage of the income tax. He said this was just one part of what he called a really bad session. He did get passage of a bill that he's pushed for quite some time on kit homes as part of the solution for our housing shortage. These are smaller homes where back in the Sears and Roebuck calendar days, or catalog days, I should say, you could literally get in there and you could order a home and they ship you. There'd be pallets that show up outside your house. And this is, do-it-yourself instructions on how to build a smaller home. I think it has to be 800 square feet or smaller. Plenty big for, a couple, especially an older couple that, kids are out of the house, plenty big enough to live in. So the kit homes are coming back as part of the housing solution in the state of Washington. But he in these reflections, I want to share with you what he thought about the income tax. And then really what he said was a nasty year. He said he thought the 2025 session and how things were run by majority Democrats were as bad as it can get. He said this year got even worse. Here's part of that conversation with Senator Wilson.
I was never in any hurry to really exit this session. In fact, I kind of would have wished we had more time and this was at least a long session. Who knows? Maybe it was strategically planned by interested parties to do it this way, where you don't have a lot of time. I don't think we fully vetted the importance and on a transparent basis with our bosses, and that's the people that we serve. You saw record-breaking attendance for people that took the time to weigh in, over 100,000 on the income tax bill alone. And yet with this in a matter of few days and hours, we made decisions that affect history going forward. But ultimately, we're not in a good place. This was not a good year. I really believe that last session in 2025, I kind of thought that, as with most overwhelming issues, you would bottom out. We didn't bottom out. This year, we hit the bottom. There's no lower place to go forward on our economic responsibility to you and everybody else in this state. It's got a potential for it could just get worse from here on out. I want to tout the good things, but it's overshadowed and drowned out by the process, by design, the way it handled, and here we are stuck with things that we know are headed to the courts, and I think we knew better.
So again, we're still waiting to find out when Governor Ferguson is going to sign the income tax bill and whether or not any parts of that will be vetoed. And of course, next steps are a legal challenge. Where that's going to come from, we don't. We've heard lots of rumors, but and speculations out there as to who's going to be behind that, and then whether or not there will, in tandem, or maybe next year, be a citizen initiative campaigned in an effort to roll back the recently passed income tax. So, no signing yet on the income tax as we dive in. A week since it arrived on the desk of Governor Bob Ferguson, the so called millionaire's tax for just shy of 10% tax on income above $1 million or combined household income above that threshold. So, this is pretty interesting. How about instead of implementing an income tax in Washington, we unleash Washington's housing productivity and let that be part of the revenue solution. And at the same time, of course, that would address the critical housing shortage that we have. That is the suggestion coming from the Building Industry Association of Washington and the Washington Center for Housing Studies. They ran the numbers and found that building 20,000 additional homes annually could generate about $600 million in state revenue. That's about a quarter of the projected first year revenue from the proposed income tax. So it's not going to bring in all of the money from the income tax that's projected to come, depending on how many wealthy people pick up and leave and relocate their businesses elsewhere to avoid the tax. But this is, potentially a real piece of the solution if we can unleash that building capacity. So I spoke today with Jan Heimbaugh, Executive Director of External Affairs for the Building Industry Association of Washington.
I mean, I think everyone admits that we have a housing crisis, and that means, right, homes are too expensive. People can't access them, and there's not enough of them, and they're too expensive because there's not enough of them. And we have consistently said that from no matter what your sort of political bent is, everyone has acknowledged that there is some sort of housing crisis. And the State Department of Commerce also has said we need to build this many houses by, 1 million houses by 2030. We're not going to be anywhere close to that. But we were sitting over here at BIW as they were discussing the income taxes and like the need for consistent long-term stable revenue, the quote unquote need, right? It's another sort of debatable thing, but like, let's accept that premise. And routinely we put out a report that, historically we've been like the amount of tax revenue that is generated from new home construction for the state and local governments is a lot every year. And it's sustainable in a way too, because you're also then improving property values, and those properties are long-term stable funding for state and local government tax receipts. So we were just thinking like, well, if we built more houses, I wonder if this would solve part of what we are calling a budget crisis or a budget need or a budget gap. And turns out, it would make a significant impact. And I think how we budget here and how the state approaches tax revenue is exactly the opposite of what it should be, instead of sort of spurring economic development. I mean, if we built 20,000 more houses annually, right, we're getting to a quarter of the revenue of what they anticipate the income tax is going to generate. If we built, in the houses that we actually needed, we could probably cover that income tax. But like, that's just the housing. That's just housing. What if we actually, allowed for people to do other businesses too? What kind of tax revenue are those generating? And how are we looking for opportunities to encourage businesses and encourage economic growth here for things like increased property tax, sustainable property tax revenue? You get someone to move into a home, they're living and working in their community, they're paying sales tax, they're paying property tax. Those things are all multipliers on a stable funding source for our state instead of sort of the very volatile income tax.
So Jan explained that, when you get someone moved into a home, they're living there, they're working in that community, and they're paying sales tax, they're paying property tax, and those things are all multipliers, right? For stable funding for the state instead of this more volatile income tax. And the income tax, she said, is going to hurt a lot of their own members, people who are not uber wealthy at all. These are the guys with, smaller, medium-sized construction companies in the state. She said it's going to hit those folks because they're not taking home $1 million in income for the year, but just the amount of cash that you have to have on hand to even start to build one house, let alone a subdivision or a multi-family complex, an apartment complex, that requires a lot of capital. So at times you're going to have an account that shows a heck of a lot of that capital, makes you look like a millionaire, even though that's not the case. Those folks, she says, a lot of her builders are already telling her, we operate a little bit in Washington, a little bit in Idaho, a little bit in Arizona. We're going to up and probably do all of our future building in another state to avoid not only the income tax that's coming here, but all the other burdensome taxes and regulations on builders.